Hello everyone, this is Arif. In our today's video, I will talk about stock exchange, how I started investing in stock exchange. So basically, I will give you an overview of how I started and what was my general perception about stock exchange. And after a month, when I'm already practically involved in the um, buying and selling of the stocks, what is my experience? This is a very raw video, so you will not find any proper technically systematically organized discussion, but rather my purpose is to share my experience. Maybe after a while, when I'm pretty much experienced more in this area in domain, I might come up with more guidelines and more advice and suggestions. But this video is mainly I'm making just in order to share my personal experiences and what my values and what my perception were before and what is after. So let's start. Initially, whenever I used to hear the word stock exchange, I always associate stock exchange with gambling. And personally, I am a very systematic and organized person, so I do not like any unpredictability kind of any investment which is way too unpredictable and work on speculations. You will be surprised to know, despite the fact that I spent in industry in a internal audit domain where I was involved in a lot of areas of audit and have very close eye on the treasury side of the business as well. That despite 13 years of experience and having a bachelor's and a master's in accounting and with 11 certifications in audit risk and compliance and governance related domain, I was of the opinion and ignorant enough, literally, that I always associated stock market investment as gambling. Though there is some truth to that statement, but if you are, I have just discovered now that if you are long-term investors, the stock exchange give you a consistently 10 to 12% of return on an annual basis. There are some basic rules which you have to follow, and those rules are that you invest for at least 5 to 10 years within the stock market. You do not do a day trading, which is purely speculation, in which was, as of my opinion as well, that this is more of a gambling, because the statistics show 80% of the people who involve in day trading, they lose their money, which is statistically like every investor who invests in day trading, they are at very high risk and they will lose their money. So I personally recommend to the people, and I personally, what I have experienced, that and what I'm even doing it, that I'm going for a long-term portfolio investment. What are the key factors that you have to take into account before explaining those things? At the end of this video, I will just give you a quick view that how I started. Basically, I had a bank account. So based on the bank account, you can reach out to a broker firm, because you cannot directly trade in the stocks of the companies directly by yourself. So you have to use a middleman, which is called broker firm or brokerage firms. So these brokerage firms, they provide you access to buy and sell the stocks in the market. So I had a bank account, so I reached out to one brokerage firm. I did my research that which brokerage firms is in the top 10, and I chose one of it. There are certain guidelines and factors which you might, if you are more interested in doing a proper shortlisting of brokerage fund, you can find it on, simply Google it, that what are the key things that you want to see in a brokerage firm, because they charge basically on every transaction you either you buy or sell, they charge your service fee. So that you have to take into account, and your credibility and all, and the convenience they will provide, whether they provide you to buy and trade shares through your mobile phone application, through web application, through phone. So these are things which you can take into account. So I chose one brokerage firm. So I had a bank account. I associate my bank account with the brokerage firm, and then they facilitated me in making my investor account. So I transferred the amount in my investor account, and then from there you can simply go on the portal and see different companies, and you can buy and sell. Buying and sell is very simple. There are different types of buying and different types of selling that you can easily get to know. Just simply Google whatever the types. There are 4 or 5 types. Simply you can buy the shares at the market price, whatever is the prevailing market price. You can give a condition to the brokerage firm that you want to buy if the price falls certain level, or if you want to buy for a short term and then want to sell it quite often, or if you want to buy certain number of shares, like if you give a command that you don't want less than that. So the same concept applies in selling as well, that you can sell it at the market price. You can define uh, let's say 5% increase whenever the price of the shares goes to 5. The broker automatically sell out your shares. Or if the price decreases at a certain level, let's say less than 5%, you do not want to take more risk, so you let it, the brokerage firms sell it. So these are certain kind of commands which you can do. But the main purpose of this video is, it's very simple. You need to have a bank account. You reach out to the brokerage firm. They will facilitate you in opening your investor account, and from that investor account you can go buy and sell. When I'm buying any company or any stocks, what I look into it, I just go. There are multiple websites, even on the same brokerage firm's website, you will find that, just to see how profitable that company is, what is the growth rate. For example, is it consistently growing and doing a good business? How much earning per share they have? Earning per share is basically the total profit that you take, and actually you don't have to calculate, it's all written there. So basically the concept is that the total profit divided by total number of the shares of the company, so you get the earning EPS, earning per share. So that also reflection of if it is going increases, means it's a good company. You also these all technical matters I might will cover in the other series of videos, but here my just purpose is, like, there are certain things which you can just see, for which you don't need to be very technically sound. These are just basic and common sense. And then you see dividend is a small proportion of the profit every year which the company gives to its shareholder. Some company do, some company they don't, but generally the companies they give. So you also look at that in the past, how much dividend this company is giving you on your proportion of your shares. So this is another way of doing it. And there is one more thing which I look into it, like how the company is managing the cash through cash flow statement. So this is a bit kind of technical, but generally these are the key factors which you can take into account, and based on that you select one company and then you invest in that company, and then you forget. Because as I say, if you are value investors, you will wait for 5 years or 10 years, so the company growth enhance during the 5 years, the market value of the shares will also enhance, and during the 5 years you will keep on getting the profit dividends. And some companies, they also give you some extra bonus shares, so that also get accumulated, and after 5 years you can cash, and for each year you will get like an increase of 10 to 12% in terms of value, in terms of growth. So that is a very sustainable model, and almost 100% people, if you're a long-term investor, you will get it a predictable return. Here you have to take into account that you do not invest all your savings in one company. You just invest in top 10, top 20 companies. By this you are managing your risk. So let's say if out of 22 companies get bankrupt, let's say for any good or bad reason, still you are having 18 companies which were on annually basis were giving you 10 to 12% return. So this is one thing. And second thing which you have to take into account, that you will not put your substantial saving into this kind of activity. You will just put, for me it's like 1% of my saving. I have, this is the maximum threshold, but some people they say 5 to 8% you can put it in the stock. But if the key criteria is, if you lost that money, will you be able to sleep at night? So that's what amount you have to invest in the stock. Not because it's a gamble, just because like it's a thing which is a long term, so you have to put like wisely. And these benchmarks, they are set based on the experience of people who have invested for 30 years 40 years in the stock market. So this is just the basic overview. So whenever you sell that sale, the proceeds of the sales, at whichever price you sell that sale, within 2 to 3 days it's come to your bank account, and that's it. So it is that simple. And I also encourage you, especially the young kids, even from your pocket money you can start investing. You don't have to be 18. You can open an account under your parents' name, and you can start trading from there. So start trading, because by this you will have a real, you will start learning the real knowledge about the companies, how the companies work, what are their financial statements, what is revenue, what is loss, what is the long-term vision. So these things, if you want to have a quick understanding, you need to put yourself out there and do some practical work. And the most proud moment is when you say that I'm also one of the owner of Tesla or Amazon or Bank of America or any big company, even if you have one share, you are the owner. So this is the amazing part. And this is my general experience. And well, I would say that it's been like almost a month and so, and whatever amount I have invested, it went a bit higher, or at the bare minimum I have the same level of amount. I haven't lost technically anything, and by the end of the year I will be getting dividends on that. And if the market goes well and the market and the companies grows, then I will get my stock value will also increase. So this is my experience, and I will keep on sharing with you periodically on my experiences and the learnings which I make out of the stock exchange, in order to facilitate you to be more wise and start having some passive income in your total income, in order for you to be financially literate and financially independent. I will conclude my video. Thank you for watching, and hope to see you in the next video.